Good evening. After 5 straight losses the previous week, Nifty gained 2.6% this week. But the useful story is not just the rebound, it is how that rebound broadened, narrowed, and then broadened again. Monday delivered the first repair. Oil fell sharply after the United States and Iran paused strikes. Nifty held its entire opening gap. 43 of its 50 stocks advanced, every tracked sector rose, and India VIX fell almost 10%. Lower oil eased important cost and inflation pressure for India, although the geopolitical pause was not a durable settlement. Tuesday's monthly expiry interrupted the momentum without breaking it. Nifty ended almost flat near 24,000. Technology surged, but banks, consumer staples, and small caps weakened. The largest nearby clusters of outstanding option contracts migrated toward 23,950 to 24,000 as the day progressed. They coincided with repeated crossings and little lasting progress, not proof that options positioning caused the outcome. Wednesday supplied the week's clearest confirmation. Nifty opened above Tuesday's range, never filled the gap, and gained 1.1%. Banks and the broader market joined technology, advancing shares heavily outnumbered declines, and both foreign and domestic institutions were net cash buyers. Thursday tested that improvement. Nifty rose again, but banks slipped and declines in the Nifty 500 more than doubled advances. The index looked stronger than the market beneath it. The Federal Reserve held rates, but 3 voters preferred an increase, so there was no clear global easing signal. Friday answered part of that concern. Banks, mid-caps, and small caps rose, and Nifty 500 advances exceeded declines. Technology fell, but autos and oil and gas shares led. Participation improved even as leadership rotated. Institutional flows strengthened the weekly picture. Foreign institutions bought a net 5,950 crore rupees in the cash market. That reversed 2 weeks of net selling in our preserved comparison. Domestic institutions added another 5,388 crore rupees. These totals corroborate the rebound, but they do not reveal market breadth, intraday timing, derivatives hedges, or what caused each move. From a technical analysis point of view, Stochastic asks where price closed within its recent range. Its faster line captures the more immediate move. Its slower signal line smooths that reading. On both the daily and weekly charts, the faster line rose above the signal line and price moved toward the upper part of its recent range. Short and medium horizon momentum therefore improved without yet reaching an extreme reading. But momentum is not the same as a completed trend reversal. Nifty finished above its short-term daily averages and its weekly 34-period average. Its daily 200-period average, weekly 50-period average, and weekly trend-following reference remained overhead, concentrated roughly between 24,760 and 24,875. The evidence therefore supports a strong short-term repair with improving momentum, not yet a completed longer-term reversal. Thursday's narrow breadth, uneven bank participation, and unresolved oil risk are the counterweight. For next week, the first potential override is oil. Renewed geopolitical escalation could quickly reprice Monday's Indian setup. Tuesday is Nifty expiry, when a fresh option chain map can identify crowded strikes but cannot guarantee how price responds. Friday's United States employment report can move global rate expectations, the dollar and foreign risk appetite. The simple test is participation. If banks and the wider market continue to confirm the index, the repair becomes more durable. If the headline rises while they fall behind again, this week's improvement remains rotation rather than broad strength. This is market analysis and education, not investment advice or a recommendation to buy, sell, or hold any security.